Well, hello, everyone, and thank you so much for joining the Alamo Mortgage Holdings webinar today. We've got such an exciting presentation to show you on how you can earn completely passive income by investing in the U.S. mortgage notes. This is such an interesting opportunity, and it's particularly well suited for individuals that may be from the United Kingdom, from the UK, where they're looking for something that could be an investment that can add to their retirement, or if you're an institutional investor, if you're looking to diversify the currency holdings of your portfolio, you can get more US dollars with this. So the percentage of your portfolio from being 100% in British pounds, it could be maybe 85% in British pounds and 15% in American dollars, or 50-50. Before I get started with this presentation, I need to do a quick disclaimer, and then we'll get to the fun part. So as accredited investors, you will be aware that all investments carry some level of risk. This investment is only available to investors who are able to assess their own appetite for risk. Please read the risk statement within the investment memorandum before investing. All right, well, fantastic. Let's get started here, and we'll kind of go through everything. So we offer an 8% bond. It's a fixed income product. We suggest an investment of £100,000. We pay interest twice a year biannually. The term is from 3 to 50 years. And the mission of Alamo Mortgage Holdings is to provide passive income to non-US accredited investors and institutions by purchasing real estate-backed mortgage notes in the US, in the state of Texas, while providing greater liquidity to owners of these notes. So that's the basics of what we've got. Let me tell you who I am. I want to tell you a little bit about myself and talk about the team. The team at Alamo Mortgage Holdings has over 200 years of business experience, with 100 years in the mortgage or real estate industry in Texas. And we'll go through the other team members in a minute. As our team members, they have successfully managed investment funds, real estate projects worldwide, and overseen up to $1 billion in financial assets. Members of our team have worked with clients including BG Group, Basil, and Everts. As for myself, I'm an experienced businessman. I have been doing investing many years. I'm from the United States. With regards to mortgage note investing, I actually trained with Eddie Speed. He's actually the individual in the United States who's purchased the most mortgage notes. He's bought over 50,000 notes in his career, and by now it's probably over 100,000. So fantastic. I'm active in different businesses in the US and Europe. You can read more about my details on the website. We have Marina Zahorelska. She's our international investment coordinator. She is so smart, so talented. She speaks 5 languages. So if you have a particular language you want to speak, there's a good chance she can communicate with you. She graduated with a degree in business from the EU Business School, and she works with investors. We have Scott Wynn. He's our industry expert. He's a veteran of the mortgage note industry. He has worked in the mortgage note industry for more than 30 years. During that time, he's done it all: buying notes, originating notes, collections. He's also done repairing and selling houses, bulk REO, and non-performing note portfolios. So he's someone that adds a lot of experience and value to the team. We have Fred Hobbs. He's our director of mortgage servicing. Fred, he has been a licensed mortgage originator in the state of Texas in the United States since the year 2000. He's also the founder and president of Texas Mortgage Capital, and he has originated conventional and government-backed mortgage loans. He has a wealth of experience. He's originated thousands of private money residential notes. So he is such an asset. And he also has a mortgage servicing company called SecureNet Loan Servicing. And we have an agreement where they take care of all of the servicing for the notes that Alamo Mortgage Holdings acquires, which is fantastic because all of that is handled where all of the collections, all of the reminder notices, everything is so well done by SecureNet, and I highly recommend that company. I highly recommend SecureNet. David Jones, he's a licensed attorney in the state of Texas. He's a third-generation lawyer. He's been in the title and industry since 2004, so he's got a lot of years of experience. He helps us at Alamo with doing the legal due diligence on the notes that we acquire. He also helps with workout situations where if a borrower is having an issue that we can't resolve with initial conversations, he's able to step in and help with what needs to be done there. He knows a lot about asset protection strategies. He's a great lawyer, and he's our in-house counsel. We have Anna Kulikova. She works with investors, investor relations. She's originally from Moscow, Russia, and she speaks several languages. So she likes to work with investors to work out their portfolio so that they can achieve their passive income goals. We have Mark DeRuyter. He's the Chief Technical Officer, but he's more than just Chief Technical Officer. Mark brings a wealth of experience with financial software. He has actually written mortgage servicing, commercial level mortgage software, and he's got experience in all the latest technologies. So he helps us not only with software, but also with systems. So he's a very smart guy. Great to have him. So now let's talk about the product. We offer 8% on our bond. We offer 3 options. You can choose a 3-year or a 5-year or a 50-year. All of them pay 8%. Once a year, we adjust the interest rates, but these are our current rates. So if you like that 8% rate, you can lock it in for as long a term as you want, up to 50 years. And the minimum term is 8 years. Now let's talk for the UK investor about what this really means. And a lot of our investors, the interest that we get is from people in the United Kingdom, institutions, family offices, and high net worth accredited investors. They are looking for a solution to deal with the fact that so much has happened with the British pound. And we'll talk about that on the next slide. But first, I want to do a comparison so you can get an idea of how much does a 30-year UK gilt, what's the yield on a 30-year UK gilt? And if you're not from the UK, a gilt is just a bond. It's a government bond. So this shows here very clearly the difference, and you can kind of get an idea of what you would benefit.
Is very interesting. And this is, if you are an investor that's an accredited investor in the United Kingdom, you may be wondering what is going on with the 30-year Treasury gilt yield. So let's take a look at this and talk about it for just a minute, and then we'll compare it to Alamo Mortgage Holdings, our yield. And I'll give you a hint. Alamo Mortgage Holdings has a far, far higher yield. So if we were to go back to, say, the year 1980, the highest that we have here is around 1981. The yields were running about 13, almost 14, 13 and a half, 14%. And then you notice how over time, the general trend has been largely downward. I mean, we look here and we see that the yield as of, for example, 2016, if we look at 2016, the yield's like 1.4%. And then if we go all the way down to May of 2020, the yield fell all the way down to 0.57%. Now it's starting to slowly go back up. And as of this video, December 2022, the yield was at 3.678%. So let's just kind of compare that. Let's imagine that you buy gilt, you would get a 3.68% yield if you were to purchase a 30-year gilt. But now imagine that you instead decided to purchase an Alamo Mortgage Holdings bond. How much would you make? Well, that is a great question, and I'm happy to answer it. So basically, with an Alamo Mortgage Holdings bond, you'd be getting right here at 8%. That's a tremendous improvement over what you can get on a gilt. Now, I know a lot of people are going to say, but a gilt has a zero default risk. I get it. I understand. But here's the thing, folks. You're getting such a low return on a gilt that you may want to consider if that actually makes sense to you in terms of what you're dealing with there. Because if you were to instead purchase an Alamo Mortgage Holdings corporate income bond, which is the bond of a UK company, you'd be earning right at 8% yield. And if we were to go back in time, you wouldn't have seen a yield like that for many years. You would have seen the last time gilts were giving an 8% yield was, looks like it was right around, let's see, when was it? 1996, so almost 30 years. So in the last 30 years, it hasn't gotten close to an 8% yield. So that's worth thinking about. If you would prefer to get an 8% yield, and you understand that it's not a government-backed guarantee. It is backed by collateral, though. It's backed by mortgages. It's something that you definitely should consider. Be happy to chat with you about what Alamo Mortgage Holdings can do for you in terms of providing passive income. And I wish you a fantastic day.
Fantastic. So that's what I wanted to show there, just where you could kind of get an idea on what we were looking at, what we were dealing with. So now let's go on to the next slide. And this is one that if you are a UK investor, I really want you to think about this, because a lot of times the investors I talk to that are from the UK, they're almost in a bubble where they are only thinking from the perspective of the UK, and they're in a situation where they get target fixated on in the UK. Oh, I'm going to get a 12% rate of return. Oh, I'm going to get a 10% rate of return. And they lose track of the exchange rate and what that does. So I would like you to pay attention, please. Please just keep an open mind when you watch this. I'm not telling you what to do. I just am bringing it to your attention that I think it's important, and I think it's something that you can benefit by noticing this information. Now, let me go through this here. If you're looking to purchase gilts, let's say you're looking around and you bumped into this video and you're looking to purchase gilts, you probably are in the situation where you want a reliable way to obtain passive income, and gilts would fit this requirement. The problem with gilts, though, is they are denominated in British pounds, and the pound has a decades-long history, a tradition of losing value against the US dollar. Another problem with purchasing gilts is that the returns they offer are lower than corporate income bonds. They're always lower. Interest on all registered gilts is payable gross without deduction of tax. Holders of gilts on the register maintained by CIS may opt to have tax deducted at source by applying to CIS. Gilts, of course, have their merits. And for an investor, this is important. Gilts have their merits. And for an investor that can turn a blind eye to the high rates of inflation. So if you're the type of investor that can see all that high inflation in the United Kingdom and you can just shut your eyes, turn a blind eye and say, I don't see it. That is one of the requirements. The second requirement is if you can also, with your other eye, turn a blind eye to the weakening British pound. If you can just ignore that for decades, your pound has lost value against the dollar. Ever since Bretton Woods, it's lost and weakened against the US dollar. Then if you're that type of investor, then yeah, you can accept gilts and you'll get paid on time and you'll get some passive income and it'll be great. And they're index linked and you can go to sleep and just, you turned a blind eye on both of the problems and hey, everything's good. Yet the fact that gilts are easier to purchase and more well-known does not mean you will earn as much interest. If you were to instead purchase my company, Alamo Mortgage Holdings, we offer a corporate income bond. If you were to purchase a corporate income bond through Alamo Mortgage Holdings, you could potentially earn hundreds of basis points more per year on your corporate income bonds than those old gilts. If you're interested in purchasing a bond, you can contact me directly by emailing ben.miller@alamomortgageholdings.co.uk or call me. I've got a US number, 1 for the United States, and then area code 817-203-4160. We can have a discussion about your passive income goals and also your investment goals. If after that discussion, the product seems suitable for your investment portfolio, you then can sign some paperwork that will be prepared based on the term of the bond you are looking for and some other features. If you currently have British pounds and you want to exchange for US dollars, that's easy to do. We simply handle the conversion for you and then your bond is paid in dollars. At the point it is converted, you have made a dollar-denominated investment and no longer will potentially lose money on the exchange rate if the US dollar keeps rising against the British pound sterling. If you are in the situation where you have pounds and normally would want to purchase gilts, but you're looking at all this inflation and the pound. So that is so important. It's so important when you think about that, how that all really impacts everything. It's just crucial, actually, and I encourage everyone to think about that. Now let's go through how this works. For example, in the United States, we have a mortgage note that has a balance of $100,000. The debt owed on the note is $100,000. Alamo Mortgage Holdings would make an offer to purchase that note for example, $70,000 from a motivated seller. I'll talk about that later, how we would do that. And I'll also explain why the interest rate would be 10%. A lot of times people are surprised that the interest rates are so high. I'll go through all of that. But our yield would increase because we bought a note that pays 10%, but we bought it at a steep discount. So the yield on the note is higher, 14.2%, which makes it easy for us to pay out 8% to our mailbox money, passive income investors. Now let's talk about what actually determines the value of a note, because if you're going to be buying something, everybody knows in real estate how that works, where it's comparable sales, or if it's a commercial property, it's actually based on cash flow and cap rate. But we're going to talk here about mortgage debt. What determines the value of mortgage debt? Because we know what determines the value of real estate. Real estate is determined by the value of a particular flat or house. It's determined by what are comparable houses and flats. What do they sell for? That determines the value. If it's a commercial property, it's determined differently, where it's determined by the cash flow on the commercial property. But for this example, if we talk about a mortgage note on, say, a property, maybe a residential home, there's six factors that determine the value of a mortgage note. The first factor is the buyer. So if you had a choice between buyers, say you have a property and you're trying to decide who to sell the property to, and you've got one person that is a government employee, and that government employee has a high salary. They've been working for many years for the government. Maybe they work as a post office person. Maybe they deliver packages for the post office. And they've been doing this for 10 years. If the government is their employer, you know there's a very high probability they're going to get paid on time. But if you have another buyer that says, you know, I'm 24 years old and I just started my new company and I'm just going to make a bunch of money with my company, and they don't have a regular income, but they have a plan where they're going to make money in the future, that sort of buyer is far less desirable. It's better to sell the asset to one that has regular government income, the government employee, or the one that works at some sort of a big corporation. Maybe they work at Microsoft, maybe they work at Google, maybe they work at some big corporation. That buyer is more likely to be able to pay, where they are not going to have cash flow experiences where the things are up or down. The second thing that determines the value is the collateral. So the collateral means the actual asset. So let's say that the property is worth $100,000. Say that's the market value. That's the real value, $100,000. But say that you had a seller that he sold the property with a note for $200,000. Pretend he found somebody who didn't know the prices, and that person agreed to pay $200,000, even though the market value is only $100,000. You have to treat that note differently, because the fact that he found somebody that signed a note and the asset's only worth 100, but he found someone that signed a note for 200 does not make the note worth 200. You could look at that note and you could base it on the value of the collateral. So that's a mistake, is a lot of times people don't look at the collateral, they just look at the value of the debt. And when they see the value of the debt, they may not have properly analyzed what's the collateral worth. The third factor that drives the value is the down payment, the money that the buyer initially paid. So let's say you had two buyers, one that put 30%, 40% of the purchase price, where if it was 100,000, maybe that buyer put down 30,000, 40,000, 30 or 40%. And then say another buyer said, you know what, I want to buy this. I'll pay you the 100,000, but I only have $1,000. I only can put down 1,000. Can you finance 99,000? And the seller agreed. So they both agreed to buy the asset for 100,000, but one of them put down 20,000. Another put down only 1,000. The one that put down the larger down payment is better, because there's less risk of the person saying, you know what, I don't want this. I'm just going to leave. I'm just going to move. I'm just going to, do, because he's got virtually nothing to lose. He lost $1,000, his down payment. But the one that put 20,000 or 30,000 down, he lost a lot more if he walks away from the deal. So that's why you look at the buyer's equity or their down payment or their upfront money. That's an indication of the value. So a buyer that puts down 10% is better than a buyer that puts down 1%. The fourth thing that's important is the actual interest rate, the interest rate on the note. So
if you have a note, if you have a mortgage debt that pays 10% or 12%, that is better than a mortgage note that only pays 5% or 4%. So if you had a choice between two notes, two mortgage debts, and the first paid 5% and the second paid 10%, the one that paid 10% is better. The next factor that drives value is the history of the payments. So when you buy these mortgage debts, you want to look at how long has the person been making payments. You want to be careful buying a new note. You want to see a record of how long the person has been making payments. So if a person has a 30-year note, and they are 4 years into a 30-year note, where they still have 26 years left, that is safer if you see a record of payments compared to a 30-year note that the person put the down payment down, but they haven't yet made their first payment. Because what if the person just walks away? What if they don't make that payment? Then you've bought a note that is a non-performing note. You want to buy a performing note. A performing note is more valuable than a non-performing note, because then you don't have any work to do. You just buy the note, and the borrower makes payments to you. So a performing note is better, and the history of performance is important. The next factor that drives value, the sixth factor, is the actual paperwork, the legal paperwork, if it was done properly. Because if you have a note that was just two guys that were sitting around a kitchen table and they worked out a deal and they wrote it up without a lawyer, where they just wrote up an agreement and they signed it, that is less valuable because the note likely has mistakes. They're not lawyers. They just agreed that, yeah, I'll make payments to you for 30 years. Did they remember to put in any of the legal language? Did they know how to put any of the legal language in? These things are important. That type of note is less valuable than a note that had a proper closing at a legitimate company with legitimate lawyers that drafted the paperwork. Because you know that it's very likely that if you buy that note and the borrower doesn't make payments to you, you have legal recourse.
So that's it. That's real important on what actually drives the value of a note is something that has to be carefully considered. So now let's take an example here to make this more clear. Imagine that this is not a property that we have in our portfolio. This is not something we have a note against, but it's a real property that would give you an idea of how this might work. It's in Texas. This property is listed for sale for $120,000. Let's imagine that the seller tried to sell it for $120,000. Nobody that had financing came forward, and somebody that was self-employed came forward and said, I'd like to buy your house. I'll pay you $120,000. And the seller said, well, great, pay me $120,000. He said, well, I don't have $120,000 cash. Can you maybe finance it to me? And then he said, no, I don't want to do that. Go talk to a bank. I know a great banker. He can help you. And then he gave him the name of his banker, and the seller went over and talked to the banker, and the banker said, hey, listen, you don't have a good credit score. You don't have reliable income. There's no way we're going to make you a loan. Get out of here. So then the buyer went back to the seller and said, I talked to the bank. They said, no. Can I please do the deal where I just make payments to you? I don't understand why we can't do that. I'll pay you $20,000. I'll make payments to you every month. If it's something where, and then finally they reached an agreement where the seller basically said, well, listen, I don't really need the money that much, but I'm not going to finance it to you at a bank rate of interest. I want a 10% rate of interest. So if you want me to be the bank, I want 10% interest. And And the buyer said, I'm happy to do that. I'll pay you 10%. So they worked out a deal. The buyer put down 20,000. The debt is 100,000 with 360 payments, 30-year note, 10% interest rate, monthly payment of $877 per month. And let's imagine that 5 years has passed where this buyer has been doing everything perfectly. Every month they pay without fail. Every month they pay. So the remaining debt on that note, even though the buyer has paid a total of 877 times 60 months, even though the buyer has paid a lot of money on that, about 48,000, but the actual debt, due to the way that a mortgage works, most of that went to interest. So the unpaid balance on the notes, 96,000. Now, this seller that owns this note, he now, for whatever reason, decides he wants cash. There's a bunch of reasons, but just for whatever reason, he doesn't want to wait for payments. He needs cash for something. He might approach Alamo, or Alamo might contact him, and there'd be a discussion where at first he'd say, pay me $96,574 for the note. That's what it's worth. You're going to get 10% interest. It's a great deal. And then Alamo would look at everything and make an offer. So let's imagine that the offer was, say we're looking for a 12% rate of return, the yield, 12% yield. The maximum yield, the amount that we could offer would be 83,000. But notice that if we were to go that high, we'd probably start out at 70,000 or 60,000. But just imagine that that's what we offered. That would be an investment to value of 36,000 in equity. So that's a big advantage there, the safety, if this is done correctly. So now here's what I really want people from the UK to notice. If you go back in time, and this is talking about the exchange rate between the pound and the dollar, and why a lot of people that are in the UK, they're so fixated on getting a 10% or 12% rate on my investments. They're not even paying any attention to this exchange rate, and it hurts them. So back in December of 1945, Bretton Woods Agreement set the exchange rate at 1 British pound could purchase $4.03 American. So if you look over time, there's a trend here where decade after decade, the British pound loses value. For example, by 1949, the pound had already dropped to $2.80, where it could only buy $2.80. If you went to 1977, the pound, 1 British pound could only buy $1.82. And if you went all the way down to the 1st of January, 1 British pound could only buy $1.21. So that is something that's real relevant, because if you're getting a 10 or 12% rate of return in the UK and you're losing on the exchange rate, well, that's something to think about. You want to think about that. Now let's take a look at what are the packages of mortgage notes. So this is something that Alamo purchases. We purchase packages of mortgage notes.
This right here
is a real package.
Actually an example of what a portfolio of loan notes might look like. So this is actually a real portfolio. And you look here and you can see the name of the borrower, the number of months. You can see the interest rate. This debt is actually pretty high, 14.75% is what they're paying on that mortgage. The monthly payment is $278.50. Then you can see the terms, the status, this sort of thing. So, I mean, you've got a list here, and this is an example of a package where a package of these mortgages can be purchased. This type of deal would be done by a larger investor. It would not typically be a single investor that would buy this package. For example, my company, Alamo Mortgage Holdings, this is the type of package that we might actually purchase, something like this. But if you're just starting out in investing, you might start out by, you're just going to buy one mortgage note. So for example, you might come in and this mortgage note
If you find something like this out on the market, you might try to negotiate down from, the unpaid balance at 89,570. Maybe you try to buy it for 59,000 or 69,000. But that would be one note. But you can also purchase packages of notes. And that's something that Alamo Mortgage Holdings is involved with. It's a company that's a United Kingdom company that actually purchases packages of mortgage notes. So wanted to give you an idea of what a package of notes looked like. Fantastic, fantastic. So very good on that. All right, let's go on here. So why bonds? Why in the world should anyone buy bonds? This is a great question. I get this sometimes from people where they say, why should I buy bonds when inflation's so high? Well, good question. Rather than me give you my opinion, I'm going to talk about a Nobel Prize winning economist, Harry Markowitz. He's actually considered the grandfather of portfolio building. He won the 1990 Nobel Prize for Economics for contributions to what is now known as modern portfolio theory. So, but even though he did that, when it came to his own investments, he used a much simpler approach. This is a quote from him. I visualized my grief if the stock market went way up and I wasn't in it, or if it went way down and I was completely in it. So I split my contributions 50-50 between stocks and bonds. He would maybe adjust it once a year. Now, I want you to think about your own portfolio, folks. How much of your portfolio, what percentage of your portfolio is in bonds? What percentage of it? Do you have 10% in bonds? Do you have zero? I mean, I run across people that have 0% in bonds where they're all gambling on that cryptocurrency. I mean, yeah, that sounds great, but it doesn't always work out. Just look at FTX. So my point is just think about that, and things that are tried and true from the past, a lot of times they're useful. So why secure our notes with Texas mortgage debt? Well, Texas is a state that's winning. We've got people moving into Texas. We've got people coming from other states like New York and California. And that has the effect of increasing the real estate prices as the demand for real estate increases, because when they move, they need a place to live. They need a house. They want to buy something. All of that pushes up the real estate prices in Texas. And for our business, where we have mortgage notes that are secured by, our notes are secured by real estate. So that is something that is a benefit when the collateral increases in value. So let's talk about some of the advantages and key features of the bond. First, you can reach your passive income goals more quickly. We offer an annual investment program where you can come in and you can say, you know what, I want to get started on this. I want to do 100,000 pounds a year, or I want to do 50,000 pounds a year, or whatever you want to do. That way we can get to that passive income goal that you set. Some people are looking for 5,000 pounds a month. Some people are looking for 10,000 pounds. Some people are looking for 100,000 pounds, and it just depends on the person, what they're looking for, but we can work with anything. Another advantage is you get maximum diversification. We all know in investing, folks, how important diversification is. It is critical. Diversification is key. So with this, you're acquiring, basically as Alamo acquires different mortgage notes, we have diversification where if one note is bad, say it doesn't pay and something's wrong with it, we can just replace it with a good note. We take it out of our loan portfolio. So what about if there are no fees? Well, in the days we live in where there's the hedge fund and the private equity guys running around and they're talking about our fees are 2 and 20, and I'm sure many of you have heard their presentations. I'm not giving those guys a hard time. I think that they deserve their money, their fees. I'm not making a problem. I've got a lot of friends that are in that business, so I'm not knocking them. But what I am telling you folks is if you invest with Alamo, your money's not going to pay fees. We have a different business model where we're using it. We're buying mortgage notes. We're buying mortgage notes with your money, and then we're making a profit on the spread. And that allows us to pay you passive income. You don't have to learn the note business. You don't have to figure all this stuff out. We can get that mailbox money moving to you in 30 to 60 days, depending on how much you're looking to place. So it is fantastic, but you start earning as soon as you start taking action with Alamo. We also offer interest payment flexibility. We can work on that. Here's a few illustrations to kind of break down, hey, how does this work? Well, it's simple. You invest 100,000 at the end of the term. If you've got a 1-year term, you get 108,000. You get payments during that period. If it's a 5-year term, you invest 100,000, you get back 140,000. If it's a 50-year term, and that's a product that's attractive to institutional investors, it also could be something where if you're looking to set up a really long-term stream of revenue, you invest 100,000 pounds and you get back 500,000 pounds, 400,000 of interest and 100,000 pounds of principal. Questions that we sometimes get: why should I invest in the notes? Well, this is an investment that is suitable, in my opinion. I'm the director. It's suitable for investors that are looking for an above average return on investments. If you don't care about that, if you're like, hey, I'm an average person, just give me an average return, you can buy a gilt and you can go get that 3.7% yield. Maybe you want the security of a note that is asset-based. Maybe you like asset-based. That's a great thing. Maybe you're looking for passive income. If those three make sense to you, Alamo makes sense to you. How long is the note term? It ranges from 3 to 50 years. Can you put the notes into your SIP? Well, they are suitable for self-invested personal pensions, but you still have to get the approval of your SIP provider. Now, folks, I want to tell you something. If you have a SIP provider that doesn't understand what Alamo is doing, that won't work with you, call us. We know a lot of other SIP providers that would jump at the chance to earn your business. What type of an investment is it? You're purchasing UK corporate income bonds. You're not purchasing a government bond. Is it a regulated product? No, this product is not regulated. This product, that's part of the reason that we can pay higher returns, is because we haven't had to go through that additional expense of regulation. We have more money available to pay our investors because we haven't had that additional time and money expense of going through regulation. Who can invest? Well, folks, and for judging from the first requirement is that you be over 18 years old. And I've got some good news for everyone here in this room. It looks like everyone meets that requirement. It looks like you're all over 18. So you all can invest on that one. You can invest as a trust. You can invest as a company. You can invest as a charity. All options are open with Alamo. How is your money protected? Well, we have multiple layers of security and safeguards to protect investors' capital. And since we're short on time, we can do that in a one-on-one, but everything goes through an extensive due diligence process before we do a deal. Can I invest through a company in our joint applications? Yes, you can invest through a company. Yes, joint applications are permitted. How is a loan note different from a government loan note? Well, you're buying a private company's note. So how's the tax managed? We pay 100% of the money to you. We don't get involved with that. We don't take your taxes out. We pay all the money to you so that you and your accountant can decide what's the best strategy on it. Is there a limit on how much I can invest? Great question. The suggested minimum investment is 100,000 pounds. But folks, I want you to understand, if you want to start with something lower than 100,000 pounds, we will work with you. If you're maybe a new investor, or maybe you just want to get started on an annual investment program where you come in and say, I want to put in, for example, 50,000 pounds a year, we can do that with you. Can you get access to your money early? No, this is not something like day trading where you can just log on to your computer and, the stock went down, I'm going to sell it at a loss. First of all, that day trading is no good. A lot of people do better if they just took a position and held a position. So with this, you're making a longer term investment, but you're ensuring a longer term passive income stream. How will you receive your interest? We'll pay it to the bank account you nominate. How can you invest? Contact me. call me at 1-817-203-4160. I've got a US number, or go to our website, alamomortgageholdings.co.uk. The contact form is there. Send us a message. We love to work with our investors. We welcome you as an investor. That is it for our presentation. So now I'm going to open it up for any questions. Please feel free to ask any questions, but I am going to stop the recording. Thank you all for coming today. I appreciate it.